worried about the market, here's why it is imperative to think long term while you're investing. That if you're worried about the short term, that emotionally sets you up for failure. Let's go through this amazing article from Dimensional together. Thatcher Taylor, welcome back to my classroom. I read this article from Dimensional. Dimensional is an amazing investment company. This article is from the founder, the creator, and Dimensional is gaining popularity in the industry as a really big investment firm that uses really high quality long-term investment strategies. But this article really nails home perspective. And I want to point out a few things. I'll read a little bit and point out a few things. So hang with me here. Title of it, Worried About Stocks, Why Long-Term Investing is Crucial. So first thing here, let's go down. Imagine it's 25 years ago. It's 1997. J.K. Rowling just published the first Harry Potter book, which is interesting to think about. General Motors is releasing the EV1, an electric car with a range of 60 miles. Think about now all the electric cars that we have or that are coming. The internet is in its infancy, Y2K looms, and everyone is worried about the Russian financial crisis. I remember being on those original computer programs, the internet. It's like a completely different world. But remember, we're setting up perspective on the timeline in 1997. So this author, David Booth, the founder of Dimensional, gives a nice little addition to the perspective. He says, a stranger offers to tell you what's going to happen over the course of the next 25 years. Here's the big question. Would you invest in the stock market knowing these next events were going to happen? And here's the next big question. This is probably a bigger question. Not just can you get in, but can you stay invested? An Asian contagion, Russian defaults, tech collapses, 9/11, stocks, the lost decade, which is basically 2001 to 2010, the Great Recession, the global pandemic, second Russian default. So if someone walked up to you in 1997 and said, all this stuff's going to happen, I know it's exactly going to happen, would you be too scared to invest? Most people, I would say almost everybody, are going to say yes. But here's what happened. From January of 1997 to December of 2021, the same 25-year period, the U.S. stock market returned on average 9.8% a year, which is in alignment with its historical average. So there's this whole list of things that happened, catastrophes, terrible events, that if some person predicted them in 1997, you would be so fearful of the market. But if you were just there to weather the storm, you would have made 9.8%. It would have been arguably your best performing asset over that period of time. A dollar invested at the beginning of the period would be worth $10.25 at the end of the period. That's pretty good growth. It's always important to know that investing in the markets is uncertain. We don't know. But this is where you need to decide how your mentality and how your behavior affects your investment strategy. As always, investing in the markets is uncertain. Nothing is guaranteed. But this is where your mentality and your behavior and your experience comes into your investment strategy. If you scroll down here, the author, Mr. Booth, says, I am an eternal optimist because I believe in people. I have an unshakable faith in human beings' ability to deal with tough times. If you have this mentality, you're an optimist, you have a long-term view that regardless of whatever is happening now, you believe in the long term, it's going to get better. Innovation is going to continue. Companies are going to continue to grow and thrive and continue to build that market price over long periods of time into a growth mentality. If you are a pessimist, you're fearful of the future. You don't believe it's going to get better, so you most likely won't invest, which means you miss opportunities of a 9.8% a year return, regardless of all the problems that happened over that period of time. You need to believe that it's going to get better if you're going to be a long-term investor. It's vital. Here's the problem if you don't believe and you're a pessimist. That means the money that you earn, if you're earning any money, is going to sit in cash. You're going to be scared. Or you're going to be buying and selling stocks at inopportune times, which is going to defeat your portfolio's return. But if your money's sitting in cash, you're getting destroyed by interest rates and purchasing power. Inflation is going to bury you if your money is sitting in cash. You will not build wealth. You will continuously lose money over long periods of time because inflation and purchasing power will eat away because your pessimism is fearful of the long-term growth of our economy and our society and stocks. The power of these companies to make money over long periods of time is what people believe in. If you believe in that, you have a chance to invest and think long term. If you need help with your investment strategy, reach out to a person like me. They can explain this a little bit more and we can fine tune it. But do know, if you're going to invest, a good advisor will set time to your goals, and your investment strategy will be built off a time-based mentality. Long term will be invested differently than short-term money. Hopefully you found this valuable. Thanks for watching. Let me know if you have any questions. Talk to you soon.